I see a lot of people out there debating, are we going to have a stock market crash in 2024 or not? And I'm here to tell you here today that we are in a stock market crash right now. Three core things I want to address in this video. What is a stock market crash? What is a market crash? There's three characteristics. If you do not have these three characteristics, you are not in a stock market crash. If you have these three characteristics going on all simultaneously, you are 100% guaranteed that you're in a stock market crash. So we'll address, do we have all three of those things? Spoiler alert. We do have all three of those things going on simultaneously, which means we are right now in a stock market crash. We're going to address at the third thing here today, are we at the beginning of this crash? Are we in the middle of this crash? Or are we at the end of this crash, right? And, it reminds me of if I asked you, are you spinning around right now? You'd be like, no, I'm not spinning around. I'm just, watching this video on my phone or my computer or the TV or whatever, right? But in fact, we are spinning. We're spinning very rapidly. Just no one really realizes it. Kind of like no one really realizes we're actually in a stock market crash as we speak right now, folks, okay? I'm going to address this. I appreciate y'all joining me as always. Thank you so much for being here. Thank you for being subscribed. This is a good one here today. This is a really good one here today, folks, okay? Alrighty, so what are the three things you have to have a stock market crash? And I started in the stock market crash of 08, 09. That's when I started my investing career, we can call it, right? I studied the tech bubble crash. I studied different crashes we had back in the 80s, including the 1987 crash. I went all the way back to, obviously, prior to the Fed and prior to, really that's called the modern economic system we're in, and looked at those crashes. And there's three things without a doubt. Every single crash has these three things all in common. And without these three things, you're not in a market crash. The first one is quality stocks everywhere are at multi-year lows. That's the first thing you need. You need quality. You can't just be some, crap stocks that no one ever heard of, or some small speculative stocks that are at multi-year lows. It has to be quality companies that if you said that company, everybody knows the name of that company, and they're like, I know what that company does. What? That's at a 3, 5, 7, 10, 12-year low? What? The second thing you have to have pretty much almost no stocks at 52-week highs, like very few and far between. Like it's almost like, what? I can't believe a stock actually in this market reached a 52-week high. Like how's that even possible? And the third component you have to have is you have to have fear in the market. And so what we're about to go through here is all three of those characteristics. And like I said, I gave you a spoiler alert. We have all three of these going on simultaneously, but let me prove it to you right now. First off, let's go through that first point, okay? Do we have super quality companies at multi-year lows all over this market? And the answer is abso-dang-lutely. This is Clorox Company. Everybody watching this video knows the Clorox Company. Everybody knows Clorox bleach, okay? And here we are with Clorox right now trading at prices it traded last at in like 2018, 2017, 2016. Multi-year lows on Clorox Company at this point in time. Target, one of the most well-run retailers of the past decade, I would say. And Target's always known as a very premium quality stock in the stock market. This stock is trading at similar prices that we saw back in 2020, similar prices that we saw back in 2019. Folks, we're 2 months away from 2024, okay? And this stock is at multi-year lows. Dollar General, one of the biggest dollar store brands out there, usually known as a very premium quality stock. This stock right now is trading at prices we last have seen back in about 2018, 2019 time frame. If we look at Campbell's Soup, Campbell's Flippin' Flapjack and Soup, this stock is trading back at prices we last have seen in around 2018, 2019 for Campbell's Soup. Remember, a lot of these businesses aren't just super famous companies and seen as stable businesses, but a lot of them are seen as almost like recession-proof type companies, and yet they're still trading back at many multi-year lows. J.M. Smuckers, are we talking jam or are we talking jelly? This stock is trading back at prices we have seen back in 2020, 2019, 2018, 2017 for J.M. Smuckers now at this point in time. Estee Lauder. Estee Lauder is certainly one of the most quality companies in the entire stock market. This stock price is getting wrecked. It is now down to prices we have last seen in around 2018, 2019, folks, okay? Whirlpool, look at this stock. We have seen this stock even back, if you go back to kind of 2018, 2019, Whirlpool was trading higher than it is today. The only time period Whirlpool in any time in the past 10 plus years really has been trading lower than this was back in the Rona crash, folks. Back in the Rona crash. That's extraordinary, right? Look at PayPal. Look at PayPal. You've got to be kidding me. PayPal's trading back at prices it was back in 2017. Now, keep in mind, PayPal back in 2017 didn't even have close to the revenues this company has, didn't have even close to the amount of users it has now, didn't even have close to as much net income as a company does now. It was a joke of a company compared to the PayPal nowadays. But yet this stock price is all the way back to the same levels it was in 2017. Foot Locker is back to a price that look at this. Foot Locker, the only time we've seen the price this low was in the Rona crash, when the malls were shut down and we thought everybody that was a mall-based retailer was going to go bankrupt. Bankrupt, folks. That's where Foot Locker is back to. And if you pull this stock up anytime in the past 10 plus years, you can't find it lower than right now, outside of the Rona crash when malls were literally closed. Like, how crazy is that to think, right? Walgreens Boots Alliance, one of the biggest, pretty much the second biggest pharmacy chain out there, right? I couldn't even find recently. I went all the way back to kind of 2015. Walgreens hasn't even been this low since 2015. I had to back it all the way up to around 2009. In the lows of the great financial crisis, that's the last time I could find Walgreens trading around the same price it's trading at now, was in the lows of the 2009 great financial crisis crash, when we were afraid we were going to lose the entire financial system, when unemployment was skyrocketing into 10%, and we didn't know where the bottom was going to be. What an extraordinary situation. Look at Nike, certainly one of the most premium names in the stock market the last 30, 40 years, right? Nike is trading back to prices it's actually lower today than it was prior to Rona. Prior to Rona, if you go back to late 2019, going into 2020, this stock was trading above where it's trading at right now for Nike. Cheesecake Factory, you got to go back outside of obviously the Rona crash when restaurants were shut down and everybody thought all the restaurants were going to go bankrupt for a moment there, right? Outside of that scenario, you've got to go all the way back to around 2011, 2012. For Cheesecake Factory, one of the most premium names in the overall food space, restaurant space, is trading at over a decade. You have to go back over a decade to find it. Wow, it was back at these prices back in 2010, 2011, 2012. My gosh. Winning Resorts, outside of obviously the whole Rona crash and the whole shutdowns, which once again, people were scared that all the hotels are going to go bankrupt. Right? Outside of that, you're going to go back to around 2016 to find Wynn trading at these sorts of prices, even back in 2010, folks. That's how far back in time we got to go. So basically, Wynn's trading at the same price it was trading at 13 plus years ago for one of the most premium resort companies in the world. And think about how much money Wynn has made over the past 13 years. Add up all the net income, all the dividends paid, right? All the new properties added. How much of a stronger overall company it is today versus what it was back then. And that's what we're talking about here, right? Align Technologies, which makes like the invisible braces and things like that. Phenomenal business model. They almost have like a monopoly type market share in their market. This stock is trading back at prices we saw in the Rona crash, right? In 2019, in 2018. And think about where Align business model is today versus where it was in 2018, right? It's a night and day difference. But that's what we're talking about. This is the most shocking one of all of them. Of everything I just showed you, this is the most shocking. Everybody watching this video right now, you've heard of Southwest Airlines. You probably fly on Southwest Airlines. You've probably flown on Southwest Airlines. You might love Southwest Airlines, okay? This is the most shocking one. This stock is lower today than it was in the Rona crash. How does that make any damn sense? We talked about travel was shut down during the Rona crash. And there was ultimate fear about all the airlines were going to go bankrupt because no one can travel now, right? And Southwest Airlines is trading cheaper today than back there. That's the most shocking one of all. We have to go back to like 2013 or so to find Southwest, so about a decade ago, to find Southwest Airlines trading at these sorts of prices. That's extraordinary, folks. That is absolutely extraordinary, and this is a market we're in right now, okay? So, first thing, do we have a check when it comes to quality stocks everywhere at multi-year lows? Absolutely. Every single, and I could have kept going. I could have showed you guys a million charts. I could have kept going. Every single stock I just showed you is a quality premium name in the stock market. The type of company everybody knows, the type of company that if you said, how do you feel about, putting my money there for the next 10 years, people would be like, oh, that's probably a pretty good place to put your money there for the next 10 years, right? And all those stocks are at, 4, 5, 10, 12, 14-year lows, 15-year lows. Extraordinary, folks. Absolutely extraordinary. So next thing we have to answer is, are we pretty much almost having no stocks hitting highs right now, right? If you're in a real stock market crash, you have hardly anything hitting highs. And so how do we look at something like this? Wall Street Journal does a great job of basically telling us stocks that are hitting 52-week highs and 52-week lows, okay? There's only 20 stocks in the entire New York Stock Exchange that basically hit 52-week highs. 20. Meanwhile, there's 354 stocks that just hit new 52-week lows. Oh! No, you know what I was thinking? I was thinking, well, how many stocks are in the New York Stock Exchange, right? Because there's going to be a lot, right? And what would you guess? If I asked you how many stocks are in the New York Stock Exchange, how many stocks would you guess? My guess was I thought probably between 1,000 and 2,000 stocks are in the New York Stock Exchange. Well, and I was a little off. There's actually 2,800 stocks, so nearly 3,000 stocks on the New York Stock Exchange, and only 20 stocks hit 52-week highs out of nearly 3,000 stocks, folks. Okay? This shows you that there's absolute devastation going on everywhere out there, and the chances you're in a stock that is hitting a 52-week high is like winning the lottery right now. That's how bad it's gotten in this market. So to answer that question, have we pretty much hit, are pretty much no stocks hitting highs? Absolutely. So we got another check mark there. Next check mark, fear. Do we have real fear in the market? Well, there's a few ways to gauge fear outside of just, stocks hitting multi-year lows and hardly any stocks hitting highs. There's specific gauges we can look at. And let me tell you, fear's all over this market. Here's the first thing up. This is a fear and greed index, which measures 7 different categories to basically measure if there's, people are fearful in the market, extremely fearful, neutral, greedy, or extreme greedy, okay? And here's the deal. We're in extreme greed right now. We were in extreme greed. That's the last thing we're in. We're in extreme fear right now. We're in extreme fear. We were in extreme fear yesterday. We were in extreme fear last week. And guess what? A month ago, we were also in extreme fear. So we've been in extreme fear for a period of time here now at this point in time, okay? On top of that, add this on top, right? This is AI investor sentiment. So this is how investors feel the market's going to be for the next 6 months. They feel bullish, bearish. Right now, we're at 43.2% of investors are feeling bearish about the stock market for the next 6 months. That compares to an historical average of 31%. So we're over 12 percentage points higher, for the amount of investors bearish on the stock market the next 6 months. So based upon those two gauges, clearly the market's very fearful, the market's very bearish. It goes a step further. Something I love to look at is this. This is called the put to call ratio, okay? Now keep in mind, usually in the stock market, there's going to be way more people buying call options versus put options. Why is that? Well, people are going to generally be on the more bullish side because guess what? Most years the stock market's going to go up, right? And so naturally, it's a much more intelligent decision. If you're going to be buying calls or puts, you're going to want to overwhelmingly buy calls over the period of time, right? Because most of the time the stock market goes up. So if you're ever in a time period where people are buying more put options than call options, you're in a very bearish market. And this ratio basically tells you. So you should almost always have this be less than 1. If you ever go over 1 for a put to call ratio, that means you're in a super bearish market, a super fearful market. Because it should almost always be under 1. A lot of times it should be at maybe 0.8, 0.7, 0.6, something like that, right? Here's the deal. We're over 1 right now, right? We hit the big number. We're over 1, which means overwhelmingly investors are scared as crap and they're loading up on put options and they say, I don't want a piece of call options. That's what they're saying right now in this market, right? So we have all 3 checks. We have quality stocks everywhere at multi-year lows. We have almost no stocks at 52-week highs, and we have a lot of fear in the market through the 3 main gauges that you want to look at. And there's another gauge I could actually show you that's basically around sentiment from kind of, let's call it active managed money. And active managed money is not very exposed to the market right now, okay? And that's something I actually showed a bunch of screenshots and different things in the private stock group yesterday in regards to that, okay? So we have it all, right? Now, the next question we got to answer is, okay, are we more toward the beginning of this thing? Are we more toward the middle of this market crash? More toward the end? When do we bottom out this market? And a good way to look at that, I'll explain it to you like this. This is very, very important if you want to know how close you are to a market bottom or not, okay? So what I like to look at is actually the Russell 2000. The Russell 2000 is a phenomenal one to look at because I feel like it's many times actually it's the most practical index of them all, the Russell 2000. Whereas the Dow is so heavy weighted based upon a stock price that doesn't even really make sense, okay? But that's the way the Dow does it. So the Dow I don't think is always the most practical index to look at. The NASDAQ can go through insane bubbles in pops. So I don't think the NASDAQ is usually the best thing to look at if you're trying to gauge a bottom. Look at the Russell. The Russell's always the most practical index. It's always been that way for the last 30 plus years, and I think it's going to continue to be that way, okay? So obviously the great financial crisis crash, right? We went back in the Russell to where we were basically about 6 years prior. 6 years prior. Now, there was an extreme crash, obviously, right? An extreme crash, an extreme circumstance where we almost lost the entire financial system, right? And there was true systemic fear of losing the entire banking system. While you had housing crash, the worst we've ever seen housing crash, while simultaneously we had unemployment skyrocketing. It was a pretty extreme circumstances, right? But during that situation, we went back to 6 years before where the Russell was at, okay? Now, if we go back to a prior crash, this was basically the popping of the tech bubble, which was a huge deflation, not only for tech stocks, but for stocks in general. The Russell ended up falling back to where it was 4 years prior to that, okay, in that crash. So remember, the great financial crisis, about 6 years. The tech bubble one was about 4 years prior. If we go back to this crash here, we actually had a crash in the Russell in 1998, okay? And if you go back prior to, you're about to where the Russell was about 3 years prior, okay? So 6 years, 4 years, 3 years prior. And if we go back to this one, we had a crash in the Russell around 1991, and we went back to where the Russell was basically about 3 years prior, okay? So 3 years, 4 years, 6 years. Where are we at right now? Where are we at? Let me show you exactly where we're at. Right now, we're in about we're back to prices we were about 4.5 years ago to 5.5 years ago. If you go back to 2018, this is where we were at in the Russell. If you go back to where we were at in 2019, this is where we were at in the Russell. So basically back to about 4.5 years ago, 5.5 years ago. Now at this point in time is where we are at in regards to the Russell. So if you want to know, is this a situation where we're likely to be close to a bottom here? The answer to that is more than likely, because right now we're at 4.5 to 5.5 year back twos, let's call it, right? And we know most of the time you're anywhere between 3 years and 6 years in terms of how vicious the drop is. And remember, the great financial crisis was a whole special type of drop. So there's a very high probability the Russell bottoms in 2024. It's just a big debate. Is it going to be the first quarter, second quarter, third quarter, fourth quarter, right? No, there's always a possibility that it could be worse than the great financial crisis. I don't think that's very realistic because there was a whole plethora of a whole lot. And the Fed's also in a very different situation. The Fed's more likely to bail out much quicker nowadays than they were previously. Because if you go back to the great financial crisis, there was a lot of people that felt like what the government was going to do was going to be basically socialism, which was a whole different perspective than we have now. Nowadays, people don't even question if the Fed's going to pump money into the system or not. Back in those days, that was a big like, oh my gosh, we're changing the entire financial system. This is horrible, right? So that's some food for thought there. So it is more than likely that the Russell itself and the market in general bottoms likely in 2024. And once again, it's just a big debate of what quarter, right? Now, you got to line it up to the fundamental side. And you got to say, would it make sense for the Russell and the indexes to bottom in 2024? Let's just call it in the next 12 months. So think about what has damaged the market so heavily. Okay, what has damaged this market so heavily why are we back to the same prices on the Russell that we were 4.5 to 5.5 years ago? And the reason is the Federal Reserve is actively working against the market as much as it could for really basically almost 2 years now at this point in time, right? And they're obviously interest rates rising to, it's the fastest the Fed's ever had interest rates go up in terms of a percentage gain ever in history, right? So that clearly has an impact. On top of that, you have quantitative tightening going on instead of quantitative easing. And so the Federal Reserve really has been all against the market trying to get inflation down, right? Which you could say inflation was partially a problem that they, hatched up, but it is what it is, okay? That's not the debate. The debate is, it's not even a debate, it's just pointing out facts. The fact is the Federal Reserve is actively working against the market. Are they going to continue to? And the answer to that is likely not. They're likely not going to be interested in working against the market past 2024. And if anything, they're going to start helping the market past 2024. And there's many reasons for that. One reason is commodities are doing nothing now at this point in time. So if you're thinking, is inflation going to spike again huge? Not without commodities. You're not going to spike in commodities. Inflation's never spiked without commodities spiking. Like let that sink in for a moment. Inflation's never spiked huge without commodities spiking huge. Are you likely to see commodities spike huge? At this point in time, not super likely, right? Not super likely. And if we look at the past year for commodities, it's gone a whole lot of nowhere. This is GSG, this commodity index. It's up 0.55%, right? One of the huge reasons we had the insane inflation in 2022 is we had a commodity super cycle coming off of Rona and then into 2021, which led us to sky high inflation rates, obviously in 2022, and still elevated rates in 2023. All that's going away for 2024, okay? On top of that, housing and rents are a massive component when it comes to inflation numbers. And if you're going to look at what's going on in the housing market, none of it is inflationary. It's all deflationary. Mortgage rates are, inching closer to 8%. This is a disaster for the housing market. Basically, if you're going to try to sell a home, you need to drop your price. Like, if you want to sell a home for this next 6 to 12 months, you better be insanely competitive with price. And even if you're insanely competitive with price, you still might not move your house. So let that sink in for a moment, right? And so if anybody wants to sell a house, you got to drop price. You got to be extremely aggressive with pricing in this market because the buyers just aren't there. No, with mortgage rates the way they're at right now, the buyers simply aren't there, okay? On top of that, we got a dum-dum situation going on where essentially we've gone the most insane ever with building multifamily. And all these multifamilies are hitting right now and will be hitting over this next 12 months. It's the silliest, dumbest thing I've ever seen in my life, and it's the most inaccurate forecasting I've ever probably seen, where all these folks think it's a smart idea to build all these multifamilies right now. I'm like, you guys, you didn't learn. You didn't learn in the past, did you? I mean, look at this, folks. Multifamily is skyrocketing in terms of how much multifamily is under construction, has skyrocketed past to what we had in the great financial crisis when we had way over build housing, okay? My first apartment was in a condo community. It wasn't even supposed to be an apartment complex. It was built to be really nice condos. But guess what? The housing crash happened, and then that property, whatever you want to call it, that had to be sold for pennies on the dollar to an apartment company, and they turned those beautiful, what was supposed to be condos, into apartments. This is what happens, and it's going to be way worse. And so if you think housing is likely going to go up in the next year, I don't know what to tell you. Like, no? Do you think rents are going to go up over the next year? No. No, with these sorts of amounts of properties hitting, right? No, it's going to be interesting to see how all this plays in the numbers, right? Because you remember, a lot of these apartment communities can do incentives where they do like 2 months free and 3 months free and all these different things. And so it might look like a higher number in terms of what you're paying for rent, but in reality, you're getting 2 months free, 3 months, 4 months free. When I first signed for my apartment, that was customary. You got free first month rent and last month rent. That was very customary because the housing market was bad. Over the last many years, that went completely away. Now I'm starting to hear about all these apartment communities are starting to bring back those types of incentives. And don't believe me, by 6 months, 12 months from now, you're going to see it. Like probably every single apartment community out there is going to have some sort of incentive about a free month, 2 free months, 3 free months, all that type of stuff, because they're going to be desperate because they got ridiculous, dumb amount of multifamilies about to hit. Holy smokes. So the bottom line is, in regards to inflation, in regards to Jerome Powell continuing to work against the market, it's not likely. right? And if he's not going to work against the market anymore, past 2024, then essentially we're in a situation where that can be very bullish for small caps, because the thing that's hurt small caps more than anything is interest rates going up so substantially, the worries about inflation, right? Now, next question we got to ask ourselves is it smart to be buying in a market crash? We're in a stock market crash right now. There's no debating that after everything I just ran you through there, okay? Is it smart to be buying in a market crash, right? I was buying here today. And so I think it's a fair question, right? I was buying. I posted my moves in the Patreon portfolio. If you want to see those moves, check out the pinned comment down there. I was buying today, and I bought a brand new stock in the Patreon portfolio today, right? I posted all up. And the bottom line is, okay, so let's go back to the great financial crisis, one of the most extreme stock market crashes we've ever seen, okay? This is the NASDAQ, for instance. So let's say you were buying the NASDAQ in the crash at 2,400, and you were buying it at 2,300, and then it goes down to 2,200, and then it goes down to 2,100, and you got a friend there, and your friend's like, dude, what are you doing buying in the stock market crash? Are you an idiot? Like, are you dumb? Like what's going on with you? You can't be too smart, huh? Like you keep buying this NASDAQ, you keep buying these stocks, and they just keep going down. And then you buy some more at 2,000. And then you buy some more at 1,900. And then you buy some more at 1,800. And your friend says, listen, man, I think you need help. Like literally, I think you need to speak to somebody, because you're crazy. Like, I don't know what you're doing, but you keep buying these stocks and they just keep crashing. I think you need like professional help, right? And you're like, dang, maybe I do need help. Like maybe I got a problem, right? And then NASDAQ goes to 1,700 and 1,600 and then 1,500 and 1,400. And by this point, your friend's like, listen, man, we can't be friends anymore. Like, I'll just be honest, I think you got a problem. And so, we're not friends anymore, right? And then, the NASDAQ's at 12,000 today. And you ride past your friend on a yacht and you wave to him. You say, hey, buddy, remember when we used to be friends? You should come on my yacht sometime. That's the stock market for you, okay? That's a stock market for you. And so should you be buying during a crash? Absolutely. Anybody that sells, I know when the bottom's going to happen and that's when I'm going to buy. Baloney. Never happens. Never will happen. If anybody happens to buy the lows, it's pure luck. It's pure freaking luck, okay? Because the bottom line is you could say the bottom was there or there or there or there or there. Like, the bottom line is during a market crash, you need to be buying and you need to be buying. And then 5 years later, 7 years later, 10 years later, you pat yourself in the back and you say, damn, I made a whole lot of freaking money. But the problem is when you're in a market crash, not a lot of people are buying, folks. That's why it's a market crash, right? So, moral of the story is you buy the damn dip and you keep buying it and you keep buying it. And if it lasts another 6 months, 9 months, 3 months, 12 months, you take every opportunity you get. And then as it comes out of the crash, you keep buying. You don't freaking stop. Just because you can't get it at 1,400 anymore doesn't mean you don't buy it a year later at 2,200. You keep buying. You keep owning it. You own the flipping world, folks, okay? Alrighty, guys, appreciate you joining me for today's video. If you want to join my Patreon, see exact moves I'm making each and every week, check out the pinned comment down there. I also have a bundle where you get the Become a Master of Stock Market course in it as well, which is my #1 course ever. So definitely check that out, folks. Much love. Thanks for being subscribed. Make sure you smash, and have a great day.